Right, Randy Martinson with Martinson Ag, Ellison Thompson with the Money Farm, as well as Dwayne Bussey with Bolt Marketing. I'm Michelle Rook with Farm Journal. Going to be moderating this session here today. And first off, I got to say, I'm really glad. I'm excited to be back. I'd be more excited if we had $7 corn, $15 beans, and I'd be even more excited if we didn't have to talk about tariffs, because it's been sucking all of the air out of the room. But I jokingly said to these guys, we have nothing to talk about today, right? No news.
No news.
In fact, this has been changing on almost an every hour basis. So let's just talk a little bit about, since tariffs are the elephant in the room, let's just talk a little bit about where we are today, even developments. Walk back some tariffs on Mexico here for what, another 30 days, Randy?
Another 30 days for both Mexico and Canada. Going to delay them until I think April 3rd. Looking at the USMCA agreement to see what they can. That might be when they implement them back again. There might be some crops or some egg products that won't see tariffs just because of that agreement. China ones still stay in play. They're still looking at the extra 10%, the 20 total. So with China, nothing has changed, but this with Canada and Mexico, we've seen a little bit of a reprieve.
Yeah, I think Ellison and I were talking a little earlier about the fact that some of the news stories that have come out, we're assuming Mexico is part of that. We know they are, but we're assuming that Canada is, but they haven't really been mentioned yet, have they?
Correct. In today's announcement, they didn't actually mention Canada as being part of this exemption process yet. It was just on Mexico that was announced today. So they have 3 weeks now where they can import a lot of our grains. We're assuming as of today, for the next few weeks, the tariffs being put on. Now, Canada was completely left out of the conversation, but as we know, they are part of the USMCA agreement. So there's been a lot of rumors over the last 24 hours that we're going to see it also be implemented with Canada as well. But I think it's just a hardball game that we're playing right now. You know, Mexico, when the tariffs originally went on this week, Mexico did not retaliate immediately. They were waiting to put on any tariffs until Sunday.
Right. They had a list, right?
They had a list. Whereas Canada, within 24 hours, they had something put out there and have a California tariff in place. So it might be just a little bit of a hardball or a little bit of a waiting game here. But given that it is part of that agreement, I think there are things that they have to hold to. It'll be interesting to see what comes out of it. But from Canada's perspective, we're just a waiting game right now to see what comes of it.
Well, Dwayne, the market immediately reacted positively on both the grains and the hogs. It seems like we're higher.
It sure did. And that's really what did the market think. And yeah, the market seems to eased off the whole tariff scare a little bit. We made a nice low here. Market seems happy with the close. I'm glad this is a live taping so we don't sound silly in 2 hours when something changes on this, because it isn't ever good story.
Well, maybe by the end of the hour here, it'll have changed and we won't be able to check it. So yeah, and that's how fast the news cycle is. I mean, I remember the first Trump administration when we had the retaliatory tariffs and then we had the trade war and we were trying to negotiate the phase one deal. And Randy, I think it took us, 13 meetings, and you had to watch your Twitter feed every day to see what was going to go on and what the market was reacting to.
Yeah, maybe we traded headlines then. We're trading the headlines now again. But yeah, it took a little longer to get everything kind of in line. And in there, we were focusing more just on China. And they were the big buyer at the time, too. Now, we've got a few other countries that we're dealing with and a few other problems that we're trying to solve with the tariffs.
Okay, so do you guys think because we haven't really dealt with China that we aren't going to, or is this just kind of a holding pattern to let them sit and wait and eventually, because when I've been talking to people, they say, oh, short-term pain, long-term gain, and we are going to get some sort of a trade agreement with China. What are your guys' thoughts about that?
I think it doesn't matter in the short term because they've bought most of the soybeans we're going to ship to China. And right now, all you have to do is look at global prices, and Brazil's so much cheaper than we are. So we can put whatever tariff we want on China. They're not going to buy our soybeans. Let's watch around end of May. That's when we're supposed to start selling our new crop to China. And if those sales don't happen, then it's a problem. So I guess tariffs in the short term don't even really, I would say, don't bother China, but they're not a huge concern. But I think China's playing hardball. I think they pre-bought a lot of commodities. I think
They front loaded.
They front loaded. I think their economy is struggling, so we probably need less of them anyway. They're not expanding their hog herd. That means they don't need soybeans for soybean meal and feed. So I think we could be in for a harder battle with China, that's for sure.
Yeah. This is a little different than what we saw in 2018. Unfortunately, in 2018, when we had the trade war, this area up here was at the tip of the spear, especially with soybeans. Now, China has already announced that they are going to look at that product, right?
They are. I mean, and they did announce, when they retaliated immediately. That same night they came with their tariffs, and the first one they had was 15% was on wheat and corn. So what? They haven't bought any wheat or corn from the U.S. I mean, and nothing that hasn't been shipped already, so they can put 100% tariff. It isn't going to matter because they're not buying our product. They're not buying it from anybody, for that matter. Soybeans, they put a 10% tariff on, and they have got about 38 million bushels, I think, that's unshipped right now that are subject to that tariff. But like Dwayne said, China's not in the market right now to buy from us. I think we will get a trade deal with them. I mean, the bigger problem is that what is their trade imbalance with us? And it's about a $295 billion deficit. And we buy that much more from them than they buy from us, and that's got to start to try to, maybe close that gap a little bit. And I think we'll bring China to make a deal with it soon.
Okay, so the impact is not going to even be felt on this season, but we need to clarify as well. We still have tariffs on from the first trade war.
Correct.
And this is 10% on top of that. But are these tariffs even being enforced? They haven't even been enforced, have they?
Not that we know of.
Because the government can say, we don't have to impose those if we don't want to, on an individual basis with different companies, right?
Right. I put a 10% tariff on prom dresses, but it didn't give me any money back from my daughter buying a prom dress. So
Okay.
you can say that stuff.
That was really funny. You need to get that microphone
Sorry,
closer so everybody
sorry.
can enjoy that good joke there.
That's all right.
10% tariff on prom dresses, he said, but it didn't help him with his daughter. Yeah, I like that one. So, right, so they can choose to impose or hold the tariffs if they want to. So, like you said, right now they're shifting to South America, right?
And that's seasonal. Seasonally, this time of year, that's where they're going to be because of their harvest. And to be honest, yeah, soybeans, China is still a big buyer of our beans, whereas corn and wheat are really in Mexico and a lot of other countries. But China is not the top one for those. Soybeans, it really comes into play for. But on the other side of it, we've actually seen a lot of byproduct demand. Soy oil exports are running really good, and that is not a Chinese market that we're selling to there. So we've actually seen some other things come out of this that could help beans outside of necessarily just having to worry about tariffs.
Yeah. We had another 20,000 metric ton sale of soybean oil to an unknown destination this morning. 2 days in a row. And it has been, the exports of soybean oil have been pretty much off the charts, haven't they?
They're running over 1,000% better than a year ago. I mean, and India's been a major buyer, and from what I've heard, there's rumblings of a trade agreement happening with India. So
I'll believe that when I see it.
I know India always makes headlines, but they've been a really good demand, and they continue.
I think, are we setting up? That's what we're going to do up here, aren't we? We're going to grow soybeans to crush them and sell the oil and the meal, and Brazil's going to grow the raw soybeans and sell to China. I mean, let's look how many more acres they are planting every single year and growing more than us. I mean, that's what we're shifting to do. Hopefully it's in airplanes, biodiesel, everything like that too.
Brazil and China, though, have aligned themselves, and this has pretty much all happened since the last trade war, right?
Right. And then, actually, they went and got their own little trade
They
route.
have a trade agreement
Yep.
and the bridge and road initiative, right?
And the BRICS. And that, so they're trying, they actually, at one time, we were looking at trying to create their own currency to be able to trade amongst themselves. And I don't know if that's all going to play, but yeah, they kind of were foreseeing this, and China made the conscious decision, in 2018, to start weaning themselves off of U.S. beans and go more towards South America. To Allison, I mean, you're right. China's always going to buy from us. They can't get all their needs met out of South America, out of Brazil.
Especially if they're storing them.
Right.
Because they put them in the reserves when they buy from the United States.
From the U.S., yeah.
And they've been auctioning.
Yep. And the beans that they bought when they were buying from us were ones that were going into the
Right.
reserve. So,
Yeah, and that's typical
You're right.
because our beans store better, right?
yes.
So Brazil is going to have over a 6 billion bushel crop, right? If you equated 170 million metric tons, right?
Yep.
So that's a record. So why haven't prices fallen out of bed worse on the soybean market if that's the case? Should we be sub 10 if you've got tariff fears, got this big crop coming in? What's going on?
Be careful what you wish for.
Yeah.
No, I'm just saying,
I
it
know.
surprised me that we haven't.
Look at our ending stocks. I think that's where the story is. We're looking at less acres next year and a lot tighter stocks. So it comes back to us domestically where we're sitting at the end of the day, not necessarily on the global scale.
She's getting excited, you guys. She's getting that microphone.
I better pull mine up there.
Fired up. But I think it has more to do with our domestic situation right now on what's supporting beans going forward, and given the current outlook for what we know today, that's where we're at.
So we're at 380 million bushels on ending stocks right now. If we plant only 84 million acres of beans, USDA said we're going to be down to a 320 ending stocks. Do you think that's realistic, you guys, or are we going to have less? Here we go. We're going into the acreage battle already. We're shifting. Do we get below 84 million acres, and if so, what does that do to our ending stocks? What do you guys think?
Let's go first.
You can.
Randy does.
Okay.
Randy's. We always pick on Randy.
The acreage report is always fun to me because it's bigger than, whether you lose 2 million acres or not. That's a big deal. So I don't think our soybean acres will fall below 83 because of kind of what Allison mentioned. Look at our ending stock now. I think the market has figured it out too. It doesn't want to fall below $10 now because it wants to make sure we get these acres. But I'm higher on corn, so I got to talk corn if I'm talking soybean. I'm at 95.5. So of course the question is, well, Dwayne, where are you getting all the acres? I assume we stay dry and we have less prevent plant. We had 4.5 million acres of prevent plant last year. That's around average. We have years where it's down to a million and a half, and then we have more acres to go. Now, Jesus, knock on wood if I can find it, because I don't want to go home and watch it rain 14 inches and have prevent plant. But, that's a possibility too. That's where I'm at on the acre.
That's about acreage mix
So
here.
the only thing I could see maybe adding some acres on the soybean side is unaccounted for with the cotton. This last year, some of those guys, I know they did not make very good profits with cotton. It doesn't look very pretty going into the new year. So, I could see maybe getting a few more soybean acres out of them. But ultimately, even up here too, it just depends what kind of spring we get. And it wouldn't surprise me. Like, everybody I've talked to all winter, never planting wheat again, not doing any of that shit. And then you know what? Sorry. So, but in all reality, though, at the end of the day, like, if we get nice weather and you guys can get it in, guess who's planting wheat?
I think guys will actually start with soybeans first. I mean, that seems to be kind of a trend that we're seeing a
Plant
little bit more.
soybeans early, yeah.
Yeah.
More corn. I driving across the state, up in the northern part of North Dakota, there's a lot of guys that are burnt out on wheat, and they took it to the elevator, they sold it, they get their check, and it's $1 discount.
Yes.
Or the falling numbers takes your yield from 80 down to 40. There's just a lot of pushback on wheat right now because it's just like we've always said, what's the discount of the year going to be?
Yeah.
And there is going to be one. Whereas corn is corn, beans are beans, and right.
Yeah.
So I think mine's a little high on his corn acres.
I hope so.
Yeah.
You know what? I should have wrote down what the acres were last year, but I will give you credit, Randy, because you were very close out of this group. You were kind of I would say the outlier. And, I think I patted you on the back after the acreage actually came out.
Tell my wife I was right once.
Oh, really? Okay.
Not to be repeated.
Yeah.
You hear it once, that's it.
Yeah.
Okay, so I'm at Commodity Classic earlier in the week. It feels like it was last week because it's been a long week. But not only are we talking 94, I heard 95, 96, 97. Some idiot said 100 million acres, which that's never going to happen. No, seriously, at one of the marketing seminars, somebody threw that number
I
out.
remember reading that. It
Can
wasn't
we
me, by the way.
plant even 95 million acres of corn, can you get 181 bushel per acre trend line yield out of it that you threw out at the Ag Outlook Forum? And again, we talk about this every year. Theoreticals, I hate it that they use them.
Yeah.
But they're using trend line yields. They'll always shoot high. They're always lofty early estimates on. But those are two things that do not go together. You do not have record acres or high acres and high record breaking yield because you're planting more of the fringe acres. And those do not help your national yield on that basis. So on the soybean side, different story. You're looking at tighter acres. So you're thinking that it's going to go to a lot of good producing ground where yes, you can get a high yield. So yeah, 52 maybe is the question if those acres get planted. But if you see 94 plus million acres of corn getting in the ground, 82 is out the window. We might be looking at it all summer. The USDA might not change it, honestly. To get out finals till next January. That's the world we live in. But in all reality, it's not going to be there. Very highly.
Do we have the seed corn supply? And do we have it in the right place to even plant those acres is what I want to know. Because I've been talking to big dealers down in Nebraska and Iowa that say they're pioneer dealers. They do not have all of the numbers that they've been promising their clients. Has anybody else been hearing that?
I think we do. I think we got the seed out there to plant like my 95 and a half, not to plant 100 million. I think where the real shift and where it gets scary is if we get a delay down south and they want to switch their 114-day variety to
95.
92 or something that we have up here, and we're going to be like, no, we got this. So I would say to happen, get the seed on your farm. But, I think we have the seed. I don't know. We'll find out.
So we heard earlier today that we pretty much have most of the fertilizer in supplies in place already, 90% if we have a tariff war breaks out. And so that's good news. We've got seed, we say we've got fertilizer in place. Is it, we get it planted, and of course, then it's all about weather. But let's go back to the trend line yield. USDA has not hit their model yield 8 years in a row now. So if we get a 179 or a little more like we did last year, we're still way under 2 billion bushel ending stocks on corn, right?
Yeah. Well, last year when they came out with their Ag Outlook form, we were looking at what 2.6 billion
Yeah.
bushels of corn in ending stocks. This year we're looking at 94 million acres, yield of 182, and we're below 2 bushels, folks. Like this actually was a supportive report. Like we were below 2 billion bushels. I was thinking tops 2.3, but to actually come in below that. I mean, obviously susceptible to change. A lot depends on what demand does. We're looking at tariffs that could drastically change the picture for corn demand, which could change that. But even so, we're not looking near the level we were last year at this time. So that alone, I think, keeps us above the lows we saw last year.
Okay, so just take what you said, 2.6. Now we're at 1.54.
They were
That
off.
they were
Billion.
off almost
Billion.
a billion.
It's likely that what we're seeing in the Ag Outlook Forum and likely in the May supply and demand numbers, it's going to be the highest production numbers we're going to see for the year. From corn and wheat and soybeans.
Likely going to go down.
Okay, so then where do we need to be at for? Will you say what you're going to say, and then I'll ask the
I was
next
going to say
question.
all winter long we've been talking about. Everyone was depressed about corn acres are going to increase, and we were always talking winter that corn needs the acres. And that's exactly what Allison just said. But we need these acres to.
But you have to get what, 4 million acres or above that before you could see that ending stock number shoot up with the current demand projections that we have, right?
Yeah, I think demand is actually better than what USDA is seeing right now.
Yeah.
I do too.
Our exports are running 35% last year's pace. Ethanol has still been running a little bit ahead of pace. Feed demand, I think, that cold spell, there was a lot of corn that was being fed in 3 weeks or 2 weeks that we saw the cold. So I think they're still underestimating the corn demand for old crop, which they could trim that another 150 million bushels. So now that puts our stocks down to a 1.3, 1.2.
So if we get the tariff situation figured out, let's put that aside for just a moment. With everything else that we've talked about for fundamentals, is it possible we'll go back up and retest the highs that we saw here in February in corn?
I think we can easily take them out with the weather scare. I think, to Randy's point, our exports have been great, and now corn is cheaper again. I think our export demand is strong. I think we need the acres. A weather scare. Now the funds aren't max long; they're not record long. They've probably gotten out of 120,000 contracts, I bet. So now they can buy in a weather scare. It's a typical broker answer. I don't think we've seen the lows yet or the highs
Yeah.
Good answer.
yet. Yeah.
And-
Sorry.
And historically, though, we do not. Oh, okay, good. Finally. But historically, we do not print the highs in February. So the highs that we just saw, luckily not the highs for the year, they're still ahead of us.
Yeah.
So you can kind of say that with some certainty. Again, we got the whole growing season. Who knows what weather is going to do? Obviously, production elsewhere is very important too. So there's a lot of different things that can keep us well supported. And I'd like to think the highs are ahead of us yet.
And to Corn's point, the tariffs should make no difference. Because none of the tariffs are placed on countries that are buying our corn other than Mexico. Mexico's got 200 million that we haven't we've sold to them, but China hasn't buying, Canada isn't, they're a small player. Japan, Colombia, there have been our big buyers in corn, and we don't have tariffs on them. So it's likely the extra demand for corn continues to stay fairly strong.
And we are assuming at this point that corn would even be on the retaliation list.
Exactly. I mean,
Because it's not what we're putting on Mexico as far as tariffs. It's what do they put on us on retaliation. We don't know what that list is yet.
and after 2 years of droughts and the fact that they need the corn, it's likely corn will not be part of that list.
Yeah, they do need the corn. Let me, before I forget, so the news here about Mexico putting the Congress passing their GMO ban once again on corn. All right, so we don't know if that just because it's cultivated, right?
It's in country. It's in their country.
And what they plant. So it doesn't include
Us.
import. Okay, so that's good news. So that also tells me that they need our corn, right?
And they do. I actually had the opportunity to speak to some wheat growers, millers in Mexico, in the last few months. And it was really good to go down there and talk with them. Obviously, this last year they dealt with a drought, so they have low production anyway. But a lot of their corn and wheat area is also decreasing in size. They don't have very good prices domestically. Um, they can buy it cheaper actually from the U.S. to put labor and everything else involved. But also a lot of their wheat, even some of the corn acres, are actually in authentic agave regions. So actually, some of their farms are actually turning over into planting agave for tequila. And I guess if you look at wild tequila,
I don't know.
bushel
Can we
tequila,
get some of that up here?
I guess that's what
This
they're
group's
going
looking
through. So I
at.
think they're going through a transition period too of what their farmers are growing as well. Their demand is still going to be there. So I think at the end of the day, they still need a really good trading partner. And I think we saw that come through with the tariff action we got this week, is that they really need our product.
They bought corn a week before the tariffs went on, 114,000 metric ton.
They bought just this week.
Yes.
Yeah.
Monday. Monday. Was it Monday or Tuesday? Because I thought, it was like right when we were supposed to announce
It
the
was the
tariff.
day before.
Yeah.
They said, hey,
Tuesday.
I think it was 4.5 million bushels or something like that. So obviously there must be some confidence that this is going to get worked out.
Mhm.
Yeah.
Matter.
Or it doesn't matter.
They just
Yeah.
Okay, so that brings up a good point. Even if we put tariffs on with what's happened with the US dollar, does that offset that at this point? Because the dollar has pulled back.
Yes, we're sitting at 4 months old on the dollar.
Might not make up the whole difference quite yet, but I mean, if the dollar keeps going down, it's certainly going to help.
Right. In the pullback we've seen in futures and in the US dollar, we're actually pretty competitively priced on the global market, which is not normal this time of year. Usually we're outbid, of course, with South America's harvest coming up. But for us actually to be competitive, I don't know, that says something itself.
I think we're at like a 40-cent premium over Brazil right now, which is
It's historically
unbelievably
narrow.
narrow,
And
It's
I thought
historically
months
narrow.
ago we were going to be $1.50, and China would never think of it. I still don't think China will. The US dollar, is a great point. We're all talking tariffs, but with the cheaper corn, cheaper soybeans now, and the dollar lower, that's a good thing for us as producers.
But the real in Brazil is bit lower compared to the US dollar yet. In fact, has been earlier this dollar, wasn't it?
Yeah, it was about the time our harvest was going on, it was hitting historic lows. And then we were actually competing. They were still selling a little bit against us at that time. Now that's kind of dried out and we were able to get some of that demand back again. But, long term, the dollar hasn't had a much impact, but now it's starting to make a little bit more of a difference.
So let's talk about South America's crop. We are in the middle of soybean harvest in Brazil, but we've been starting to see some of the private firms down on their estimates for Brazilian soybeans. First of all, what do you guys know about harvest progress and what the yields are coming out like? Randy, you talk down there every week.
Yeah, every Friday we have visited a little bit, and last Friday they were talking about, harvest has been going decent in the northern region. Yields were good, but as they continue to move south, they get to see a little bit lower production. They call it they're short of budget. They're not making what they expected to make, and they're losing their money on it right now because they're below budget. But Paranara was a pretty decent yields. They started to see decreases. Now they've got in the multiple. Yields continue to drop as they move south.
Yeah, that's in the southern part of the
southern
country.
region. So as they go south, the yields are declining and they're seeing lower production. And we're starting to see that come in lower production estimates.
Do you think that the crop is maybe, at least it's not getting bigger?
I would agree.
Yeah.
Yeah, it's getting smaller.
Yeah.
It's still a huge problem. That's a big
So, like I said, 170 million metric tons of beans is roughly about 6 billion bushels.
In country,
Right.
they're estimating to be closer to 167. A little bit
Is
less.
that CONAB's figure?
No,
or
that's actually the guys that I talked to.
you talked to, but that's still a record.
It's still a record.
But it's a record, and it's a record by quite a bit. Our global stocks of soybeans are looking to swell by like about 20 million metric ton for last year's record. And back to like the S&D table, Allison, we were talking about less acres. We can't lose too many acres in the US. The problem is moving forward with demand. And now I'm talking way out there, but I think new crop export demand for soybeans might be down as much as 200 million bushels, just because China can buy from Brazil and don't have to buy from us, tariffs or no tariffs. And that's where maybe we get the cushion. But I don't think we know that for a long time yet, right? We can't pencil that in yet.
I don't know if they'll see much change to Brazil or to China because Brazil can't ship that many beans.
The
Logistics.
We saw that today too. They were talking about a conveyor that fell down at a port today
I thought I saw that.
in Brazil. And so logistically, that's where their backfall is. And even with their soybean harvest being slow and this and that, it's already late, ships are delayed, and it's hard for them to make it up. So I think they're limited to that aspect.
Right. So, like we said, China and Brazil have gotten very cozy. We know that. And so going forward, they're going to stay that way. And really, if you look back at 2018, that's when this started to ramp up their production, right? So with that being said, tariffs really started to push Brazil more. They benefited Brazil,
Yeah.
right?
They did.
They helped encourage the breaking of land and farming more acres.
Economic. I think I kind of lost the soybeans.
And I think, China's going to continue. They'll get 80% of their soybeans from Brazil. 20% will whatever they need to import. I think that'll be the breakdown. Will come from us and 80 from them.
But I think, there was a lot of comparisons when the tariffs started, obviously it's been a year we've been talking about potential tariffs coming through. It has been. And so, look, when you're comparing it to 2018, the global economy, the US economy, China's economy, Mexico, Canada's economy were much different. Today we're dealing with inflation. Canada's dealing with deflation. A lot of countries are not sitting as well as they were the last go round. So I do think there is some benefit there that could push us into some agreements sooner than later. So far, we've kind of seen that pull through because nobody really has the ability to play hardball for too long. Keep the economy sustained. So
Yeah, China's economy is not that good.
no,
They keep
no.
throwing money, stimulus packages
Yeah,
in
so,
there.
and they're just the opposite of us. You know, we're spending, spending, spending. China's people are not spending. So they need to stimulate their economy, give them money to spend, want to spend it on things, and that's where the issue is. So, but we need demand for them to buy our stuff, so we need them to stimulate their economy.
Let me go back and ask you, okay, so there's been talk about, even President Trump said yesterday, oh, we're gonna have more trade and we're gonna get another phase one, it's gonna be great, $50 billion.
We're gonna
Can
have fun.
China would China sign that kind of agreement again? Are they in a position economically where they could even buy that much? Is what I'm wondering.
I mean, the first phase one deal, was kind of written more towards China's advantage than ours too. When you looked at it, the wording basically said, yeah, we will buy this much product from the US as long as it is feasible and economical for us to do that.
Market considerations.
Yeah.
That was the air quote in the agreement. Do you remember that? I've had people say to me that are way smarter than me, it wasn't really a trade deal.
Right.
Because it was, you buy this much, but only if it fits your market.
Was down to the economic.
Right.
Are we cheaper? than
And Brazil was having trouble at that time, so it made
Yeah.
sense to buy the beans. So it was a perfect timing, perfect storm for us to be able to get those kind of deal and to sell that much into Brazil or into China. But once we got past that and phase two didn't come into play because at that point, China had switched over and was getting their needs. So things had changed in Brazil. They were able to supply them. And so then that kind of phased out the phase two.
Okay, so let's also talk about the president and the Ukraine-Russia deal. What do you think will happen with that, and what will it mean for the grain markets?
I asked the question to Randy earlier. He's got a good answer.
And what's your
Nothing.
answer?
Nothing.
Well, we have no war premium built into
None.
No.
wheat prices right now.
No,
Right?
have to. I think is Randy's.
And they don't have the grain they did 3 years ago. Russia or Ukraine. I mean,
Russia more so.
Right.
Their production's been down the last couple of years, big time, as far as wheat.
so they don't matter anymore.
When was the last time we talked about it? As far as the news.
headline move markets.
Yeah.
It's been a while.
In Ukraine is, if you look at their production, the numbers that we're getting, they can't say that they're accurate, but I mean, the numbers that we get for their production, they really haven't changed. Down a little bit this year on wheat, but not a lot. Their exports the last 3 years have held stable. So they've really, even though they've had the war going on there, not much has changed for on the wheat side. Corn has made a little bit more of a change. Sunflowers have made a little bit more of a change because they haven't been raising as many sunflowers, and the corn has been a little bit down, but mainly be from their drought now that they're in.
The market found a way to get the wheat out of Ukraine.
And so did Ukraine.
And so did
Yes.
Ukraine. Yep. So did Russia out of Ukraine.
Yeah, so yeah,
Okay, so but global stocks of wheat are very tight.
tightest they've
So
ever been.
when
It was tightest since 2018, 15.
15.
Okay, so when does the market start recognizing that? It doesn't seem like it really is appreciating that at all.
Well, it's like I just said that these are the tightest stocks we've seen in a decade, but honestly, for the last 6 years, this has been an ongoing trend of tighter and tighter global stocks, despite production issues and production scares, and even supply scares, getting stuff out of the Russia-Ukraine area, the Black Sea, and the market actually hasn't rallied as much as you maybe think that given those situations, that's where it could be. But given as tight as we are now, since we've been in the past 10 decades, I think they've become accustomed to the situation. But honestly, we're one bad weather scare or supply issue from it really erupting the wheat market.
Part of the trouble with wheat, though, too, is that there's a crop harvested every month. So there's the supplies always coming online from someplace. And, India is really the one that we're kind of watching is thinking that that's going to
They're
be the
having
biggest
crop problems, are they not?
huge crop. They're dry. They've lifted they've tried to dump wheat on the market to lower the price in country. It hasn't worked. They've lifted their import quotas now. So now it looks like they're going to start importing wheat. but they haven't done it yet. But they are in trouble. They need to bring product in, and it's just a matter of time. And that could really be the one thing that catalyst that we need to help push the wheat.
India's flirted with that notion for how many years, and they've
Yeah.
never pulled through on it. But that would be a big one because they are a huge consumer of global wheat.
Second largest producer of wheat and one of the largest consumers.
Yeah, I really thought the tight world stocks were an issue a couple weeks ago. Started to come up. I thought we were good to go, and then here we are 2 days ago, wheat making new lows. I don't know who hates wheat so much. It's always that stepchild that gets down.
Yeah.
Right. I call it the Rodney Dangerfield, basically, of the grain community. Wheat gets no respect. And I've been at a lot of marketing seminars. When you start talking about wheat, when I do that, I put a slide up, everybody starts walking out of the room. So thank you for all staying for this part of the discussion here. But it's much more important, I think, up in this area than maybe in some of the areas like Nebraska and Iowa. So that's probably part of that.
Wheat is important to corn though right now. Too,
yes, it is.
because
yes, it is. Talk about that. Let's get into the ratios and what's going on because of feed wheat is part of this is where you're going with
yes,
that.
it is.
It will get into the ration, right?
It's in the ration down in the Southern Plains right now because of price of the corn. When right now after corn, took the escalator down, but wheat was entering the feed ration and being fed down into the feed rations down in the Southern Plains because it was a cheaper product.
Interestingly enough, so I'm at Commodity Classic this week, and I'm talking to all the major commodity group CEOs, and Chandra Gould, who's the NOG CEO, said to me, wheat obviously is struggling to try to keep any market share. I mean, wheat lost market share for years now. I don't know how many years, but it's continually lost market share. If you talk to producers right now, they say the most valuable way for them to market their wheat is to put cattle on it and graze down in the south.
And up here, it's probably to harvest the straw. There's a lot of that. But I'll tell you what, that's okay. Let's let wheat prices stay low for a couple more months, get the low acreage number, and then have a weather scare or India start to buy. Then wheat could be a real bullish story this year. I can't say that too often, but I sure feel that way now.
I was curious your thoughts about acreage of wheat. So the Ag Outlook Forum, USDA came in at a little over 47 million acres for total wheat, which would be up 900,000 from last year. But let's talk about the breakout. How low do you guys think spring wheat acres will be this year? And I'm going to write this down because Randy's usually, we got a bet every year.
I was just I'm dittoing whatever Randy says.
Ditto?
He nailed
Okay.
it last year. So I'm not dumb.
I look for wheat acres to drop, spring wheat acres to drop again this year. Earlier I was going with a million. That might be a little bit aggressive. I think it'll be at least somewhere between 500,000 to 250,000. The increase that we saw from the Ag Outlook Forum, I think that's going to be. We already saw 750,000 more hard, the winter wheat planted, and then I think we could see more durum just because. The durum price for crop insurance is pretty good, and the price for durum is good. And if you got good quality, you can almost right now name your price, especially if we still see some the tariffs on Canada. The big part is, we import 120 million of spring wheat and 25 million bushels of durum now from Canada every year into North Dakota and Minnesota. So if the tariffs go on there, that will bring up some of that demand for our.
Yeah, that would have actually been a little bit of a positive that I don't think people realize that. And we don't have as much canola coming across, right?
We're the largest importer of canola from Canada and the oil too. So
Oil seeds.
Okay.
it would help soybeans.
Back to Allison's point early on, I think it depends so much on the weather. I know it does on my farm too. If it stays like this and it's the end of March, I think you see a few more spring wheat acres go in. People tend to plant that and then, either try to tile afterwards or something. So weather's still king as far as spring acres.
Sunflower is going to bid for a few of those wheat acres, or what does sunflower compete for acres with? Because prices are pretty good there, right?
The sunflower prices are really good. They saw, their acres and their production dropped in half last year. So they're going to try to get some acres this year. There's no question about it. And that'll be some of the wheat acres, some of the barley acres. I think we're going to see some fade from barley as well. Some of the edible beans and dried peas and lentils might see a little bit of a drop because of the tariff concerns again. A lot of those need to be exported. A lot of them go through the US aid program. So
USAID.
So without that, that's going to have a little impact, I think, on those acres as well.
Okay. So we've all kind of agreed here that Brazil's been pretty much eating our lunch when it comes to soybeans. Corn may be a little different question in terms of the second crop safrinha corn here this year. What are you hearing about what's being planted? Or are we behind, or have they gotten caught up now? Because they were behind for a little while on that second crop.
From what I've heard, they've gotten caught up.
Okay.
So those planting weather scares don't last very long. It's just like a weather market here when we're dealing with delayed planting or something like that. If you get a window of opportunity, a lot happens very, very quick, and they're no different. So I think we saw that play out perfectly, but that doesn't mean they're not at risk for having some kind of a weather issue. Obviously, they had weather issues this last year. There's talk that it could start drying up here again. So it all comes down to weather when it's all said and done. But as of right now, I think majority of the crop got planted within their optimal window. So I think that's out the door as far as it getting pushed back. But it just comes down to what kind of growing season they get.
Well, and as big as they are, they have to have a major crop problem for it to really make a huge impact in terms of our market, especially on soybeans. So the next thing I want to ask you guys about is, where do we find new demand for soybeans? It's got to be biofuels, okay?
Biofuels.
So let's talk about where we're going with biofuels. 2 years ago, when I was up here, we were talking about all the plants that were going in, 30% crush capacity bump up in the next few years in the Midwest. And now, because of the uncertainty of biofuels policy, including RFS, 45Z, all of that, there's some of those plans that are being put on hold, right?
Correct.
Okay. We also do not have the dollar per gallon biodiesel tax credit. So some of the biodiesel facilities are either slow or idle, right?
Mhm.
Okay. So what happens with biofuels policy going forward here? The narrative has changed, hasn't it? Is kind of what I'm getting at.
Well, I don't know if the narrative has changed as much as the concern has increased, because if the government came in and stepped up to support it, I think the narrative would go back again. So I think everybody's gotten to be a conservative narrative and not looking at, expanding as much as we were, like we saw 2 years ago and even last year. Canada had 5 plants that they were going to build for crush plants for canola, and now they're down to 3 that they're building. 2 have come off. There's a few in the United States that have come off the board right now too because of that. But we're still looking at crush demand expanding this year. And part of it, I think, is that if we can replace maybe the canola from Canada or the used restaurant oil out of
UCO,
China.
used cooking oil. That's we love acronyms in
Yeah.
agriculture.
30% of the feed stuff that used to make renewable diesel fuel is the cooking oil that we import from China. So if we take that out, then that's going to increase demand. And right now, our bean oil demand is extremely strong. Our stocks are almost zero.
I think that's where we can make up the difference. It might not be in the biofuels, but a lot of oil for the biofuels may be exported on that market. So at least we have a demand spot for it if we don't get the policy here.
So you mentioned India buying a lot of our bean oil this year, and they have what, a B40? What is their biodiesel
I think
mandate?
it's B40, and they're now looking at to go to B50
In what time frame?
next year.
Next year. And Indonesia has a similar.
Yep. And palm oil production's been hampered a little bit, and a lot of it has been going towards their biofuel program. So that's what's really helped push our bean oil market up.
They've become competitive compared to the palm oil. Palm oil prices rose because they had production issues, and now we're seeing a lot of these other oil seeds start to compete on the global market. It's been good.
It's not only production issues on palm oil,
Yeah.
it's not seen as sustainable, right?
That's true.
Yeah.
Okay, so the big panacea that we talked about was sustainable aviation fuel. And just this last week, because of the uncertainties of the 45Z policy, because we don't know if it's even going to be funded under the Inflation Reduction Act, nobody knows for sure. Um, and it's so convoluted that we can't figure it out anyways. Um, you saw Southwest Airlines say, we're not going to do sustainable aviation fuel production anymore. You saw BP walk back, like, and said they got rid of 50% or so of their investment that they were making in sustainable aviation fuel. So is the investment going away? Speak to that.
Well, Southwest, I mean, they're just happy to keep planes in the air, I think, right now. So I don't know. But you look at Delta, Delta's throwing more money at it. Yeah, so they're looking at building a big plant outside of Moorhead that's not even using using stover and other wood products or whatever to make the fuel. So, you know, I think the investment is still going to be there and it still has the possibilities, but it's going to take the government to come in and help do it just because of the cost.
It'll take, I think you're right, but I don't think we understand how huge that's going to be. We think ethanol was big and using gasoline and what, like you're talking planes now and how much they use. This would be a total game changer for us. It goes back to my point of like, I think we can crush it and use everything here and not worry about China as much someday.
What is Delta? It's 3 billion gallons a year that they burn, or 30. The airline industry is like 30 billion gallons of fuel.
That's what I mean. It's be 10% of that.
So when you look at the 45Z program, we got the GREET model, which was favorable. Basically, that was fine. But are producers going to be able to make any money on the downstream? Because when you look at climate smart ag practices, how many do they have to layer to be able to qualify? I guess, do you think there's money in?
That's a Dwayne question.
Oh boy, I really don't know. I mean, it's scary. I mean, maybe Doge will find some money for us. I don't know.
Well, Doge is finding a lot of money, that's for sure. But again, it's kind of tied up in the Inflation Reduction Act, and we don't know. I guess I wonder, did the industry get the cart before the horse?
I think it's a fluid evolving situation like tariffs.
Yeah, and this administration isn't a fan of climate smart or climate, anything to do with climate got thrown out day one. Anything that had that title behind it was canceled. So
that's for sure. So right now we've got, profit margins are tight. We had the rally in February and we've retraced a lot of that. And so let's talk about what you're telling producers right now about timing of, do you wait now for another rally to sell any old crop if you have any of that left, or what do you do with new crop? Randy, you go first. And I realize that's a loaded question because it depends on tariffs and that sort of thing.
Yeah, it does. But I mean, looking what the window we've got now, I was telling Dwayne earlier, I did a presentation last night in Oaks. Part of it was talk about what strategies going forward, what to do. So when my first slide was a blank slide, I had nothing on it.
Oh, blank slide. I thought maybe it'd be a dartboard.
Right now, it'd just be patient. I mean, there's nothing to do in this marketplace right now. The only thing I would say that you would look at doing would be reowning grain, buying feed. If you got second quarter feed needs that need to be met, buy calls to cover what you need, but reown some grain with call options. As far as looking at pricing anything at this point, I'd be patient. Allison's right. We don't top in February. We top markets April, May, and June. That's the time frame that we got to look at now to move any more grain.
And I think guys still have, it's uneasy, right? The tariffs are a very fluid situation. So come April 2nd, could we be hit again? Could we fall back to where we were? If not, make more new lows for the year. We just did this week. So if that were to happen though, right now it's not the time to be buying expensive puts or at the money puts or anything like that. So do not spend a lot of money to protect these prices where we're at today. We've gotten a bit of a rally here. If we continue to rally, hit some resistance, then yeah, I'd be all for buying puts. But if you were nervous about it today, nervous about the next 3 weeks, keep it short and cheap. I like just May. I mean, we got 50 days left in that one. It's relatively cheap protection. I just wouldn't get too worried on spending a lot of money to protect the prices that we're at today. But if we can get, if Canada or who knows what'll happen with China, but if we can get back to where we were, just reiterates that any new highs we have to be doing something on. And you don't have to spend an arm and a leg to protect prices or put futures on or lock in with the elevator. Just make sure you're at least protecting the move, because the last 8-9 days have been really ugly. Like for corn, we rallied $1.04. It took us 6 months to do that. We gave half of it back in 8 days. 8 days. I mean, that's sick. If you don't have anything on or didn't make any sales up there, and believe me, you had lots of guys telling me, oh, it's gonna keep going. It hurts a little bit when it pulls back like that. So I just make sure you're trying to front run it. It sure makes the person sleep better at night. So that's my 2 cents.
Put some orders in and let the market come to you.
And forget about them. Don't move them. Don't nothing. Put some orders in. Get into planting. You guys do your thing, and hopefully we get something going in there.
I'm the same line. This big pullback, I want to do nothing here now. The blank screen's perfect. Yeah, I want to do nothing. But have your marketing plan out there. We actually even lifted corn hedges, new crop corn hedges here on this big pullback. Now, I know in college, that's not what you're supposed to do. That's not what they taught you. But I'd go back, of course, college was a long time ago. Corn didn't move 60 cents in 4 days. Now it does. So on this big pullback, we got out of our short futures. I have the same marketing plan moving forward, the same target prices. Randy and I were talking, I have changed my percentages a little bit. So actually on this pullback, I've gotten more bullish corn and want to sell at a little bit higher prices. I think this pullback is a great time to do something we mentioned on pullbacks, urge calls. Maybe buy some call options, short dated new crop calls out there. And, I like the August because I like to get to the end of July. I think coming into this morning, I think like the 520 was under 10 cents. So that courage call is supposed to be courage for you guys to sell as the market goes up, not to try to make money on it. Because who 2 weeks ago was loving this rally going up and didn't sell? A lot of guys, right? Because every day it went up and it was easy to do nothing. This time, have that courage call in place and keep that marketing plan, like Allison said, keep it in place. Don't change it. The nitrate is what? 75% of our total hours of trade.
Yeah.
So keep them in place just in case.
Yeah, and a lot of times those orders will get hit in the overnight session, will they not?
Yeah.
Keep them odd.
Yeah, keep them on. Yeah. Don't do even.
Those big fat round numbers will never get hit. Like a 499 or even have better look at a 501. Just something odd.
Go to the coffee shop and lie. Say you got 5, whatever.
Yeah, exactly. And I need to point this out. Last year you didn't even know what a courage call was until Allison Thompson told you that. That's a great idea. Now he's like, we're doing courage calls.
Yeah, they're a great tool, especially it's easy to get hobbled up when we've gotten into the rally here. So just to have something in place, I've taken a lot of calls. Guys want to get into markets, and obviously there's a lot of volatility. So either way, I'd push you to do some kind of an option play. Your risk. I think in volatile markets like this, we got a lot of moving pieces above the market. Options are your friend. So, and there's obviously many strategies on how to handle them from there. But that's what we're here for.
So one thing I should have asked you about, and I didn't, but let's get into it real quick. The fund community went very long in the soybean or in the corn market. Last year when we sat here, they were short and they kept going short. Then they switched their position. So beans, what? Are they a little bit short in that market now, do you think?
I think they're a little short in the beans.
And they've got even shorter in wheat.
Yeah. And they're about half, they've lifted about half on the corn.
So what do they do now? What's money flow going to be like? Because you see money's coming out of the stock market. Where is it going? Is all this money just going to sit on the sidelines for a while, or where's it going to go? And what does it mean for the ag space?
Money never sits on the sidelines. I don't think they like to do that. I think You know,
Only if you're a farmer.
well, yeah, then it just sits there forever. Unless you're buying prom dresses, then it never sits there
Yeah.
either. But I think if you listen to the three of us, it sounds like we're kind of bullish corn. I think the funds see the tight world stocks, and I think they're going to go right back in and buy corn. I love that they've gotten out of 120,000 contracts. That's good because I was nervous going into the spring that they were already on. Who's going to buy then when we have a weather scare? So I'm thrilled. I don't know if they jump in quickly. I think it's a slow grind, but you give a weather scare or it starts raining in April and we don't get 94, 95 million acres of corn planted, then I think this could take off.
Well, there's talk of a weak La Nina, and usually that means we're going to have heat and dryness sometime during growing season. And Eric Snodgrass, a lot of you probably follow at Nutrient Ag Solutions, he says he thinks we're maybe going to have the potential for a wet spring. So you never know.
No.
And a dry June, July, and August.
That's what I said. Yeah, it'll be hot and dry during the growing season. So,
Drought.
oh, don't say
No.
drought.
On the way up here, I did hear somebody say that this pattern's a lot like 2019, which if you remember that, horribly wet, I almost lost it off interstate there. I was so mad. I don't want 2019.
But think back to what you just said here a minute ago. The funds were long corn when they were short or even on everything else. They knew USDA didn't have this problem. They knew that the bushels weren't there.
Farmers kind of knew it too, though. I talked to a lot of them
Yeah.
that said that.
And-
And you guys have said that to me.
We had the hint that it wasn't there in the August or September report when they came in and said that the ear weights were light for corn. So we had an indication that the yield wasn't going to be there, but we didn't get confirmation of it until it was too late.
But if they don't print it until the January final report, what good does it do these
None.
guys out here?
None
Is
whatsoever.
anybody else frustrated with that besides me?
A billion bushels.
A
That's-
billion bushels different.
No, they don't.
No, we're not.
No, they don't.
Tuesday. The index funds have also been doing fine in the ag space because what they see tariffs as inflationary, so they're buying as a hedge.
That and also they like to buy as interest rates come down. I don't know if they're right on that or not, but I think that's part of it too. But yeah, it's a long-term investment when index funds buy. And the great thing is lately we've had index fund and managed funds buy. That's when we got this big rally we got and farmers sold cash into it. That's why the basis is still bad. If we get this corn out of farmers' hands, we can really have a rally.
Okay, so to retest the highs that we had, maybe get back up above $5 corn, maybe above $11 beans. What scenarios would have to come together to do that? That's my final question for you, and then we're going to take some questions from the audience. And what do we got to have? Over $6 wheat, maybe $7?
$6 would be nice.
$6 would be nice.
That ain't that far.
You go first.
But it'd still be nice.
I think it comes down to weather, which we've got a little time here. So I guess I'm going to say this rally that I'm promising and coming probably doesn't happen for a little while. We got to get into the spring and weather rally. That's what I'm excited about the corn market. Right now in the short term, we're going to trade this tariff headline back and forth. But, like we talked about the S&D table, world stocks of corn, how tight they are. If we threaten the North American crop this year, I think we can have some upside potential.
Allison, what do you think?
Yeah, I think a lot of it comes down to supply and demand at the end of the day. Fundamentals do a lot, but technicals mean a lot too. And on the latest pullback, we broke through a lot of levels of support. So those are really good targets to be watching here going upwards, and it gives the market momentum. So yes, fundamentals do ultimately matter, but we're kind of in an area right now where we're in a lull for new fundamentals. We know a big crop's coming in yet. We know some of those things. So to get something fresh is hard. So sometimes when you're in those lull areas, technicals do rule the roost. So I do think that there is some room just from a technical standpoint of getting some decent rebound. And if it's strong enough, the funds jump on board. Yeah, we could get up to levels that would be sustainable. I do think that's where we could be. But yeah, outside of that, outside stuff matters too. Inflation, love it or hate it, it's actually really good for grain markets to get inflation coming back. There's lots of different moving pieces that could ultimately support us to those levels.
What about you, Randy? to get back up there at some point? Do we start being numb to the tariff news like we were when the Black Sea War broke out? I mean, it was crazy for a while, and then pretty soon we just became numb to it.
You know, at some point, the news has to get worked into the market, and then it's no longer news anymore. It's just the background noise that we're dealing with. And that's kind of happened with the Ukraine war. I think that's going to happen with the tariffs. It's just going to become noise that's there because we just get used to it, and we will work it into it. I think that this drop was just a lot of, it was an excuse for the funds to get out, to take their money out of the table. There was some farmers selling. The tariffs actually meant nothing to us in the big picture as far as the potential impact they could have on our demand and also on the ending stocks, because it wasn't going against countries that were really doing the buying. It hasn't been Canada and Mexico. You know, Mexico is our biggest buyer of corn. That isn't significant, but China is not significant at this point.
What do you think it needs to get back above those 5, 11?
I think it's going to take, you know, beans, it's going to be tough right now, just because we got a huge crop that's going to be coming out of, you know, South America. That's going to hit the market and move through the channels. So it's going to take maybe a little, it's going to take weather here, I think, for us to be able to get there. And planting concerns, some planting delays, a couple of 6 to 10 day forecasts that are showing above normal temps and below normal precip. You know, to give the reason for the funds to continue to keep pushing this market.
So we need a weather.
I think we need a weather scare. That's going to make the technicals look better, because as the market starts climbing, then you start triggering those algorithms that say, okay, now buy. That's yeah, it all works together.
All right, we have covered a lot of ground, folks, but is there anything that we haven't talked about that you guys would like to talk about? Anybody got a question out there? We got microphones here. And there's one in the back over here, Chris, too.
Question for you. When we look at these soybean market and stuff like that, where do you think if the government put all these soybean plants come into effect, all of a sudden now they're always on hold? Where do you think we're going to get rid of that soybean meal? About even half of those places that make soybean.
Pacific Rim.
Would they have taken it all?
Yes. And then some.
Vietnam
The
has
meal now.
The meal. Neither, because the only market they have, the only place they can buy their meal right now is from Indonesia, and it's palm meal. And they are held hostage because it's the only market, and they can ask anything for it, and they had to buy it. Now, when we have the soybean meal, we can enter that market, and they have a choice, and it's brought the price of meal down in those countries, and they're buying aggressively from the U.S.
The other question I have is, when you look at this fall's price, did the government come out with the price of soybeans from $10.20 to $10.40? Wasn't that a scenario with?
Well, you mean in the Ag Outlook Forum or
Yeah,
not?
I mean, when the government comes out last fall and they said soybeans will be what, from $10.20 to $10.40? I don't, in my opinion, you guys all got a different opinion, but I guarantee you, whether it's true or not, I'll bet you 100 to 1, we end up in that scenario. It's going to be 10.20 to 10.40, and that's what it's going to be. You think so? Or do you think that we'll even get $11?
I think we need help to get 11. On my farm, my marketing plan is to sell November beans, and this is the tightest range I've ever had, from 10.50 to 11, and I'll be done. I just wanted to break even and make money on beans, just any money at all on beans this year. You know, to answer the question, when USA put those price numbers at the bottom of their S&E table, I don't think there's that much thought that goes into it. I don't believe in conspiracy theories. I think they're just throwing a number out there for budgeting for the most part.
And then they backfill. They make the numbers work so that, you know, they make the numbers work backwards.
In the fall, it seems like in the fall, those prices almost guaranteed they're in that price range. If you ever looked at that, you look at in the fall, if they come out with a deal, and I'll guarantee you, it seems like they're always in that scenario where you might hit a If you hit $11 or something like you're, it's a miracle. It's always below that. I'm just hoping that you get back. I wonder if you ever get back to this year, back to the 10.20 or 10.30 on the futures of the soybean. It'd be a miracle if they do.
There was a question back over here. This gentleman back here in the green. Yeah, and those are frustrating. I never look at those prices when they come out because like I said, they're so theoretical. most of the time.
Been the been raising the corn price, the last couple of reports. They did lower this soybean one.
Yeah, I'm wondering about the winter wheat crop. Or is there gonna be any winter kill?
Allison starts laughing right away. You go ahead.
Winter wheat seems to have 9 lives.
It does.
It's like a cat that won't die and it comes back for a 10th. Like we talk winter kill every winter. It always seems to come out just fine at the end. Now, I think there were some valid points that definitely hurt the crop this year. But on the other point of it too, we got winter wheat seeding, winter wheat acres were up. And that's the main reason we saw higher wheat acres this year was because of the winter wheat. So we are dealing with more acres of winter wheat. And when you're dealing with higher acres, you normally do see a yield drag. So that would be the other thing that I would say is that we probably did have some fringier areas that probably didn't get the best weather conditions. So I do think that ultimately there's going to be some level of winter kill, but we really won't know that level until it gets out of dormancy. So
I think what you want to know is will there be another scare on it? I mean, whether there's winter kill or not, we won't know that until the crop is dang near harvested. But I think, correct me if I'm wrong, isn't this crop coming out of dormancy a little early?
It is.
And that to me means we could have another weather scare there. You really want to winter kill something, have it come out of dormancy, and then have a hard season. So I think there could be another story, another bull run.
Not only that, but it's dry in some of those areas. And when I talked to wheat growers from Oklahoma and Texas this week, they said that some of those acres are going to be abandoned, just because it's too dry, not even from winter kill, or like I said, again,
Grazed out.
they're going to be grazed out because that makes more sense.
And you look at the winter wheat crop, we increased it by 715,000 acres. 230 of them came in Montana, 250 came in Texas. Well, what are those two states really good at? And that's dry weather. So they saw big increases in acres. Kansas actually was down 188,000 acres. So the increase in the hard red winter wheat crop came in two of the states that are usually the driest. 233,000 of the winter wheat acres increase came in the soft red area or the corn belt wheat. That I think is going to maybe keep some of the corn acres down is because we're going to be looking at double cropping between wheat and into soybeans. Now, the soft red didn't have the snow cover or didn't have the protection when the cold snap came through Tennessee and in the mid-Atlantic states. So some of that could see some winter kill. The estimated 15%, that means it's probably closer to 5. Is what we could see as winter kill right now. But Dwayne's right. This crop is coming out of dormancy early. What doesn't get grazed out and they pull the cattle off of it. A freeze in May means a lot more damage to winter wheat than anything.
we're still a month away from getting the USDA crop conditions reports on the winter wheat.
They're actually now. Texas is now, Kansas is now, and Oklahoma is now.
But otherwise, we were watching
Yep.
over the last couple months, and they've been low.
Yeah, they have been dropping. We did see they went into dormancy, great, but they have been dropping through the winter.
All right, anybody else have a question out there? I know we cover a lot of them. Anybody else have any other? Wow, we did. Oh, there's one right there.
Yeah, President Trump in his speech says, I love you, go out and have fun. I wonder what he meant by that.
I think that comes with the CHS meeting afterwards and back out.
That's Chris, I know it
That's the fun he was talking about. Yep.
I should have done a raise of hands because when we were at Commodity Classic this week, I would say most of the producers that I talked to about their tariff concerns, because Secretary of Ag's there, we got your back, Trump's got your back, we're gonna give you MFP payments 2.0, that sort of thing. I think most of the producers that I talked to feel like tariffs are a negotiation tool for bigger deals in the end. And that reciprocal tariffs, which we didn't have in the first Trump administration, will mean that we will do many trade deals with all of these other countries to try to level the playing field and get rid of this record trade deficit that we have. So overall, I think producers have been pretty optimistic about how tariffs are going to play out. So raise a hand. Who thinks that short-term pain, long-term gain, and the gain's gonna be better than it was last time? Anybody? They're pretty optimistic, I think, about the whole situation.
Well, remember, Michelle, we all farm, so we're always optimistic.
Eternal optimist.
Yes.
100 days of pain.
How many of you out there would take another year? You're gonna get these disaster payments that are coming out, a market loss payment perhaps. And if you get an MFP payment, is that gonna be enough to get everybody through the next year? I guess that's the question I have. And how many of you wanna farm for the government? Raise your hand. Nobody does. There's not one person that put their hand up.
The good news is that the economic assistance payment is supposed to be done and be made by the March 21st date that they promised us, but we have to get by March 14th first to avoid the shutdown. So there's a continuing resolution that has to be passed, or we could see a shutdown in the government, or everybody gets fired.
Maybe that wouldn't be bad.
Yeah.
Right, so, does anybody else have a question out there? We're a little over our time already. I can't believe we went a little over hour and 15 minutes already here. Does anybody else have a question?
You make it easy, Michelle.
All right, it's just like breathing for me. It's just like chewing gum and walking. All right, so these guys are gonna be here after the presentation. They're gonna probably be hanging around for a little bit if you wanna talk to them. Just, why don't each of you say where people can get a hold of you, after the meeting? Dwayne?
After the meeting, well, they can get a hold of me right back here. I'll be by the bar. No,
I
sorry.
know, but give me your contact information.
I know. Sorry. Just kidding with you. All right. You can get a hold of me at Bolt Marketing, 605-448-2365, or you can check us out online at boltmarketingllc.com.
And follow them on X and all your social media platforms.
Yep, The Money Farm. You can find us online as well. We have a website, themoneyfarm.com. Find us on Facebook or Twitter. But otherwise, feel free to call the office, 71347-5985.
And Randy?
I guess.
Notice how he waits for me to actually prompt him.
Right. Office number, I'm trying to think of it now, so I never call it, but it's 701-205-4200. Website, martinsnake.com, or app in the App Store.
Right. I want to thank CHS for having us here for this event. It's great. And we also want to thank Mosaic because they were one of the major sponsors here. So if you see Sherry in the back, make sure you stop by and say thank you for helping us put this program together, because I think it's really great. And I think it's that way because of these great 3 market analysts. So let me have you help me give them a round of applause. All right. Well, that concludes our market presentation here at the CHS Ag Industry Day. I'm Michelle Rook. Hope you have a great day here. And all right.
Thanks again, Michelle and panel.